Good morning, everybody. It is November 14th, 2023. We are here back once again on another episode of The Market Open. It is 8:20 a.m. We are starting earlier than usual because today's a very big day, folks. Today, we've got CPI, Consumer Price Index, headline inflation, core inflation. We are going to know how bad or how good the month of October was in the United States of America when it comes to inflation. Why is this important? The American economy affects every other economy. If inflation in America is not going down or not on the correct trajectory, which needs to be down from these current levels at 3.7 in August and September, then the rest of the world is not going to like that. The rest of the world is struggling with inflation. Europe's struggling with it. Canada's struggling with it. Parts of the Middle East are struggling with it pretty dramatically. Look at Turkey, Venezuela, and parts of South America. So in order to be able to overall resolve inflation, at least the United States needs to be on the right trajectory. So today's going to be a very important day to see what ends up happening for inflation. So we've got inflation in 10 minutes. That's why we're starting early. And we're going to warm up until we get to inflation at 8:30 a.m. And we'll see what's going on Eastern Standard Time. On top of that, we got a lot of other news. We've got ARK's Cathie Wood. She made an appearance on CNBC. We'll be talking about her Bitcoin and crypto predictions along with some headlines around Tesla. We also have a bunch of Tesla news in terms of what's going on with ExxonMobil and how they're trying to really find new ways to transform their business model from just producing oil. Now they're going to be producing lithium in the United States starting in 2027. That's more bullish news for Tesla, in my opinion. The entire economy is surrounding what the EV revolution is going to look like. We got Tesla India updates. We got a bunch of things to talk about in the world of Palantir. Palantir still holding up beautifully at $19 pre-market right now, 8:22 a.m. Palantir is $19.78. Really just phenomenal price action. This stock staying in this $19 range. So we're going to talk about that. And we also have Dan Ives, who came on CNBC yesterday saying that this AI revolution is not going anywhere and Palantir is going to be in the center of it. So we got a lot to talk about, a lot to discuss, and a lot to get into in the context of CPI. Devunson Jean Dennis, thank you for being here. You're a new name and you're in the chat. I've been seeing a lot of new names over the past couple of days. Thank you so much, everyone, for being here. Michael, Billy Jack, Ty Gordon, Troy, Van, Tobor, Johnny Mac, Han, good morning from TW, Taiwan, I believe that's where it's that's where you're from. Han, thank you for being here. Crazy Wild Scale, Imnop, Jeremy, Amit Duhunga, morning from Annapurna Base Camp, Nepal. That's incredible. You know, I was reading today that Nepal banned TikTok today, so it was great. I was reading about Nepal, and you're from Nepal. Thank you so much for being here, and we got the same name, so you know you don't have a bad name. Bay Ray, Monty, Zelena from Germany, hello. Chris Patel in the chat, my fellow finance junkie, apes together strong. What's up, Chris? Chris is a 3.2 target. We'll see if that ends up happening. Benny, Christian, Practical Investing, Valero, Arnie, Adam, Kyle, thank you all for being here today. All right, folks, we got 7 minutes. We got 7 minutes before CPI comes out. You know what? Because we had Chris in the chat, we're going to get some content out of Chris's content and see what this man is projecting for CPI. So let's pull up what he tweeted last night. This was actually a projection he made, I believe, in the summer. And let's see his numbers because it's actually not that far off from what Wall Street expects. Wall Street is expecting 3.3. That is the consensus from Bank of America, JP Morgan, Citi. All these guys are saying 3.3. That's what we're going to get. We have 3.7, so it's a pretty precipitous decline from 3.7 to 3.3. Chris Patel in October is expecting November. So, well, this is October's month, right? Because we're 1 month, behind on the reporting. 3.2. So Chris is a little bit more bullish at 3.2. November for 3. December he has 2.7. So he sees inflation going from 6.3% in January down to 2.7 in December. Right now, currently we're at 3.7. He actually got it exactly correct in August. In August we came at 3.7. September he was a little bit too bullish because we still have 3.7. Let's see if October we get to 3.2. I also ran a poll on my X. And if you are not following me on X, and you should follow me because, as you can see, I tweet that I drink caramel lattes in the morning over coffee. I don't want any judgment, okay, over caramel lattes over coffee because it is what it is. Coffee is just not that good as caramel lattes. Nonetheless, that's what you get if you follow me on Twitter. I ran a poll. We got 757 votes on this poll. I said, look, 3.5, 3.4, 3.3, or 3.2. Either I'm not bullish enough and inflation comes down to 3.1 and it's going to be fun this morning, or inflation is still too sticky and we're at 3.6. And 3.5 got 32.5% of the votes. 3.2 got 24.2%. So most of the poll was a little bit more bearish at 3.5, and the second place runner-up was really bullish at 3.2. So it's going to be really interesting to see what this ends up happening. Chris says he predicted this 12 months ago. Okay, Chris, you get more credit for predicting it 12 months ago. Chris predicted this a year ago, so he was right. And let's see if he nails it at 3.2. If we get 3.2, we're not going to hear the end of it on Finance Junkies today. So let's see if we end up getting it. What do you guys think in the chat? Let's put your predictions now. We got 4 minutes until CPI breaks. Here's the website. I'm going to put it in the chat if anyone wants to access CPI. This is the exact website you go on. And this website lets you know once it comes out what it looks like. So I'm gonna share my screen. We'll be refreshing right at the moment, and then we'll have CNBC on play as well for when it comes out and see what the talking heads have to say as well. Jay Santiago says 3.3. Inbound says no idea. That's probably the right choice. Inbound. It's probably best as we say we have no idea. Sean says 3.2, 3.1, 3.3. You know what would be real? It would suck if we stay at 3.6, right? Because I don't think that's going to happen. I think the banks get it right pretty much every month. I mean, most banks had consensus of 3.6 or 3.7 last month. That's what ended up happening. The only time I think we were wrong dramatically was 2022, when no bank really understood the nature of how rampant inflation was. Everyone still thought it was transitory. So if we come in at 3.7, like Bukhari says, and we're flat for the past 3 months, it's not going to be good. So I'm hoping that does not happen. I think 3.5 or below is very possible if I had to guess 3.3. But we're going to see what ends up happening. We got 3 minutes until CPI. Practical Investor says 3.1. Jin Chown says 2.9. Okay, that's pretty bullish. I'd like to see 1.5. Will Tom Lee be right? We'll listen to Tom Lee in a bit. He is, well, actually, why don't we just play Tom Lee right now? We got 3 minutes. Let's play a little bit of what Tom Lee said yesterday, right before the 1 minute clip. So this is literally relevant for the next 3 minutes. That's how fast the stock market moves. And I tweeted this last night. I was like, this is why it's so fun covering the equity markets day to day. Like, what is more fun than the equity markets? You have all of this news coming every single day at hypersonic speeds. And within seconds, it's irrelevant. And that's why it's fun to cover the market. So here's 1 minute on Tom Lee being a little bit more bullish for CPI predictions. That'll come out in 2 minutes.
Here's what I worry about. And you were right. But if this number comes in even slightly off, are we doomed? Because has this 8% rally already been the expectation of the softer number?
Brian, you might be surprised, but I think institutional investors and retail have been fighting this rally. You can see it in the put-call ratio. Yes. The put-call ratio today hit 1.26. That's an extremely elevated reading. It's been rising the last 2 weeks. And if you look since the October 27th rally, every time an intraday 1.2 is or higher has been hit, we've rallied hard the next day. So I think into this print, if it's a little hot, I think people end up having to buy this dip because hedge funds have been shorting this rally. I know sentiment's negative, but I actually think the probabilities favor a slightly softer reading. The skew is for a hot reading. And I think we could get something that could feel like a face ripper like we had in July. So there's a possibility of quite a positive move tomorrow if it's a soft reading.
So basically, markets are likely to go up if it's hot, and markets are likely to go up a lot more if it's cold.
That's right. I think it's...
And I mean cold coming in at like a 2.8.
That's right. Yeah, it's really going to be the core month over month. Let's say so 0.3 is the consensus, and Goldman's and the JPs are at 0.36.
So you're looking at the month over month, not the year over year that I referenced.
Yes, but the year over year matters. On the core, it's still 4.2 year over year. So something below 4.2 would be considered a soft side reading.
Face ripper.
Possibly face ripper.
So what Tom is saying here is really interesting. We got CPI coming out in 30 seconds. He's saying, look, if it comes in hot, like 3.6, 3.7, there's going to be a dip. And because institutional investors and retail investors have been fighting this rally, the dip's going to get bought. So even if we decline, that's going to be good for equity markets. Let me pull up the CPI right now. And if it's cold, meaning we come in really lower than expectations, then CPI, then, I mean, the rally is going to be the rally, and it's going to be similar to July. He got the July rally correct. Tom Lee did. He predicted S&P to 450. We got there, and that's what we had. All right, folks, what do we got? What do we got? What do we got? What's the number? What's the number? 3.2. 3.2. 3.2. There we go. 3.2. That is the number on CPI headline. Over the last 12 months, the all items index increased 3.2% before seasonal adjustment. That is down from 3.6% 7. There we go. There we go. We're down, baby. I said 3. Oh, fucking Chris got it right. Damn it, Chris. Palantir's at 20. Palantir's at 20. We're up 1.5% on Okay, here we go. Let's look at the equity markets. We'll get into the report in a second. NVIDIA up 1.5%, 493. Let me open up Webull, and then we'll get into the actual report. So headlines 3.2 for those that are just joining. Chris Patel was right. We're not going to hear the end of it tonight on Finest Junkies. Let's pull up these stocks and see where the market's heading today. Oh boy, this is why it's fun to be an investor in the equity markets. Facebook all-time high 334, up 1.53%. S&P 500 up 1 freaking percent, baby. $445 on the S&P. We were at 440 just 30 seconds ago. SoFi 704 to 724. That's up. Apple 184 to 187. That's up. Amazon 142 to 144. That's up. Microsoft 366 to 372. Microsoft new 52-week high in the pre-market. That's up. Google 132 to 134. That's up. Tesla 223 to 231, up 3.4%. That's up. Snowflake up 2%. That's up. Datadog up 2.45%. That's up. And we gotta go to good old Palantir, $20.17, up 2.33%. It's like me when I was a teenager for the first time and I got some action. It's up, baby. You know what I'm talking about? Lucid somehow is also up 2%. Rivian is up 2.35%. Bitcoin up a little bit, 0.3%, up 100 points right there, 36,645. Robinhood up 845, up 1.64%. Unity's up 2%. Look at this, folks. This is bullish. This is pretty bullish. The entire market is turning a little bit green in the pre-markets. Palantir, $20.18, up 2.38% in the pre-market. All right, let's get back into the report and see what we got going on. ADJ says that joke was amazing. I'll give credit. Thank you, ADJ. Thank you. I appreciate it. Okay. I appreciate it. At least we got one person that appreciated it. Here we go. Let's get into the CPI report. This is why being an equity investor is fun, because you go through all the shit and all the pain of being in the markets and seeing yourself lose money. And if you're just patient enough, the data changes. And when the data changes, the market changes, and then stocks go up because the economy goes forward. Growth has to continue happening. And when the macroeconomic conditions change, things change. NVIDIA, 496 in the pre-market, up 2%. All right, so let's read this. The index for shelter continued to rise in October, offsetting a decline in the gasoline index and resulting in seasonally adjusted index being unchanged over the month. Okay, so shelter wasn't changed over. So gas fell, energy fell, but shelter didn't. That's interesting. A lot of people thought shelter was going to fall. Shelter seemed to not fall, as shelter seemed to be unchanged, which didn't. So if shelter was worse or shelter was better, that means the CPI would be even crazier. Oh my goodness. If I'm reading that correctly, shelter continued to rise in October. So shelter went up and it offset the decline in the energy index, which means if shelter went down, which we know it's going to start coming down, this is going to get even funnier in the next couple of months. The food index increased 0.3% in October. We know food has been more expensive. Index for food at home increased 0.3% month over month. The index for all items less food and energy rose 0.2% in October after rising 0.3% in September. Indices which increased in October include rent, owner's equivalent rent, motor vehicle insurance, medical care, recreation. The all items index rose 3.2% for the 12 months. All items less food and energy rose 4%. Energy index decreased. That's the one I was looking for. Energy index decreased 4.5% for the past 12 months. Used cars 0.8. That's amazing. Used cars down 0.8. This one was really important because that auto worker strike, people thought that used cars was going to go higher and higher. It seems like that one is going down as well. Yep, look at that right there. Used car index. There you go, October. So let's go all these real quick. Used cars down 0.8. That's amazing. Energy down 0.25. Look at that. Look at energy. Oh my God. Energy was positive since April 2023. I'm looking at commodities in particular, but energy in general, 0.4, September 0.4, and then commodities in particular went down. Gasoline of all types went down, and I saw gas for 2.99 in New Jersey just yesterday. So that makes sense that gas is down 0.49, whereas in September it was up 2.3, down 0.49. Absolutely incredible. Shelter is the one that we haven't been able to crack yet, but we know with all the rent data that we're seeing that shelter is going to crack soon. Not bad at all. Let's put up the talking heads. Let's put up the talking heads real quick. Let's see what they have to say. And then we'll keep going from there. If you're just tuning in, headline CPI comes in at 3.2. The market is absolutely loving it right now. Palantir, $20.50. Tesla's at $230. This kind of feels like a little bit of that face ripper that Tom Lee was talking about. Let's see what people have to say about it. Let's go from here.
And we just pass continuing. Too tight. And this is exactly what you said was going to happen, right?
I did. Joe, the thing about it is if you look at the headline inflation rate, it peaked in June of 22, and core CPI peaked in.
Are you guys seeing this? Hold on. Let me refresh it. Play. Okay.
That takes that year-over-year rate down close to 3% is very powerful. I don't expect the Fed to hike anymore and do expect them to be cutting next year.
So, Kitty, this is good news on inflation. Does it indicate that in an election year?
That's so weird. You guys aren't actually. I can see you guys aren't actually seeing the actual thing. Let me pull up the other one. Let me pull it up on my Google Chrome. Safari is being weird. If you're just joining in, CPI again coming in a lot lower than expected. 3.2 versus 3.1. Versus 3.7 of last month, and that's why we're seeing the decline here. Let me pull up CNBC. And then we'll pull it up right here just so you guys can see. I wanted to get a little bit of suits, and then we'll keep going from there. Palantir is over $20 in the pre-markets. That is correct. Tesla's up at $230. We're seeing a bit of a rally, folks. We're seeing what we wanted to see from CPI coming in lower than expected. Let's pull this up right here so you guys can check it out, and then we'll keep going from there. Okay, should be good now. Here we go.
The month over month, and you start interpolating out. But I will still leave us all with the notion that 4% year over year, X, very important food and energy. And by the way, all these stories about EVs and power grids and losses on transition, they're not going away. These numbers for energy and pockets of energy are going to stay firm. But that is the number I think is important. All the metrics have moved lower. And as I said, even though all of these have moved lower, they haven't really taken out, other than the headline equaling the lowest level since our high water mark. The others still are comping above levels that were lower. The 3.2 is obviously good news, but as I said, it was 3% in June. We want to pay more attention to how this transitions into the actual opening, but we'll toss it back to the panel to debate some of these numbers. Joe, back to you.
Yeah, immediate reactions, though, and pretty bigger than we've seen recently. Stay with us. Let's bring in our senior economics reporter, Steve Leisman, along with Joe Lavorgna, chief economist at SMBC Nikko Securities, and Kitty Richards, a former Treasury Department official under President Biden, also served as an economic advisor to the president when he was vice president. Steve, we'll go to you first. And I think one of the things Rick said was that 4.5 we saw has been breached on the downside for the 10 years. So that sort of, I don't know, that's kind of like a confirmation of that move, maybe.
All right, let's get it more deeper, and then we'll keep seeing what they have to say. CPI is coming down for those that are just joining in. Let's check on the 10-year real quick, and then we'll get deeper into some of this stuff on CPI. Look at that. Wow. 10-year is down dramatically. For those that weren't awake when I was awake around 7 a.m. and looking at this stuff, this bad boy was at 4.685. The 10-year was yielding you 4.685. Right now, we're at 4.512. To see that big of a decline in the 10-year within 20 minutes, I mean, goodness gracious, that is a aggressive decline. And that's another reason why equities are climbing. Palantir right now at $20.18 in the pre-market, up 2.99%. Robinhood up 2.5% at 852. Zoom is up 2%. Disney's up 1%. Disney finally above $90. That 10-year decline is incredibly important to see equities continue to come down. So that 10 years going down. Oil is also declining right now. We're at $77 on WTI crude, which, you know, the thing we were worried about in the context of CPI was that energy was going to stay elevated because in October, for at least the first half of the month, oil was at like almost $92 a barrel. I mean, it was still pretty expensive. And then towards the latter half of the month, we finally saw it come down. I guess that factored in to allowing CPI to come in a little bit more. As Arnie says in the chat, this creates FOMO in bonds going into equity instead. Yeah, a lot of people are like, you know what? Let's get it. I mean, when you see an equity market that rises, you see the S&P 500, it's up 1% in a matter of minutes. You just remember how dynamic the U.S. economy is, how resilient the overall S&P 500 is in regards to some of the most innovative companies in the world. And then you ask yourself, what the hell am I doing in bonds? Like, I didn't make a bond with this bond. Why am I here for the next 10 years? I need to be in the equity markets, and I need to be playing with some of the big boys instead of being out here. Palantir, $20.23 in the pre-market. That 2020 level, I believe, was the top for Palantir, if I'm not wrong. The 52-week high, hold on, let me check right now. 52-week high. Oh, wow, we beat the 52-week high. 2024, yeah. 2023 was the top. 52-week high on Palantir was 2024 that we hit today. Let me put this out there. Palantir breaks 20 on positive CPI data. There we go. It's happening. Now, the question is, are we going to sustain this when the market opens? I kind of think that we are. I mean, I kind of think that this is going to keep going. I don't really think this gets sold off that quickly, given how we see where the markets are going to go. My wife's boyfriend says my bonds are great. I love it. If bonds were selling off, yields will be rising a bit. I'm not saying bonds are selling off. I'm saying that people are going to equities right now, right? This creates the FOMO where people see that, look, maybe we should be in the equity markets even if we're in the bond market as well, because equities are returning way better than bonds right now. Chris Patel in the chat. Amit, how about a shout out for my Patreon post? Didn't I predict the energy decline a few months ago? Yes, Chris, you predicted the energy decline a few months ago. You were right. If anyone's interested in Chris's Patreon, you could definitely check it out. If you're a member of our Finance Junkies podcast, if you go to the description in any of the episodes, you'll see Chris's Patreon. And look, we got to give it to Chris. He was right on this one. Let me bring up his chart again. Chris was correct. And Chris was as correct as Tom Lee on this one, expecting that CPI was going to have a little bit of a face ripper rally. I don't know about you guys, but this feels like it's gearing up for a face ripper, at least in the pre-market. We'll see what happens once the market opens. But as we're looking at this is like S&P move. Remember, moving 1% on the S&P is not easy. Like that's a very big index. It just doesn't go up 1 or 2% randomly. It takes time for that sucker to move up a little bit more. That's why, even if it goes up 0.4% or goes down 0.4%, people cover it like it's the end of the world or something, because that's a big index. It's not easy for that to go up and down. Here's Chris's predictions. He thought CPI would come in at 3.2. He is correct. In the month of October, 3.2. He has CPI falling to 2.7 in December. That's the question I want to put to the chat. Do you think we can have a 2 handle on CPI by December? Let me check on TFC as well. TFC 29.99 up 2.18% as well. Let me just tweet this out. There we go. Yeah. TFC's 30 now. TFC's 30. That's the question. Do you think that we could actually get to somehow a 2.7 handle in December, or a 2 handle in December? Because that would be pretty aggressive. It's like eating fat, right? When you weigh 150 pounds, getting to 130 is easy. Getting 130 to 110 is a lot harder. So now it's going to be even more aggressive for us to come down. And I'm not sure exactly how that's going to happen. When shelter lag effect is over, we blast off. I agree with Andy. I think that is one of the missing pieces. When shelter comes down, so for those that are just joining, headline CPI came in at 3.2. Energy came down. Shelter did not come down. Shelter did not come down. And energy also, commodities and gasoline came down more dramatically. Overall energy was relatively the same, but shelter did not come down as much as we thought shelter was going to come down. Why do we think shelter is coming down? Number one, houses are getting way too expensive. Eventually, people are not going to be able to take 8.1% mortgage rates to buy these houses. Like, it's going to naturally have to come down. Supply of houses are coming up. Warren Buffett just invested in 3 of the largest home construction builders in the United States of America. He obviously sees a trend that, look, there's a lot more supply that's needed to offset the demand. So that supply is entering into the market. Airbnb millionaires are starting to realize that you can't collateralize the house that you already collateralized on top of the other house and use it in the context of margin to pay off the other houses. So that bubble is coming to burst a little bit. And then on top of that, you've got general rents that are starting to come down, right? I think in July, New York City was the most expensive it's been in like the past 30 years. That's not going to stay forever. That's not sustainable to be paying $5,500 for rent forever in New York and San Francisco. And as we see that come down, it's going to affect shelter. On top of that, commercial real estate is in for a little bit of an awakening going into 2024 as well. And if that starts affecting the entire housing market at large, or real estate market, we are going to see a dramatic decline in shelter. As you can see right here, the food index increased 0.3% in October. Energy index fell 2.5% over the month, as a 5% decline in the gasoline index more than offset increases other energy indexes. This is the most important part of the CPI data. Energy falling 2.5% over the month, with a 5% decline in gasoline index. The index for shelter continued to rise in October, which offset the decline in gasoline index, which means if shelter came down in October, this bad boy might have a 2.9 on top of it. So for the ultra bullish, they thought shelter would be coming down. Shelter did not come down, but if it did, we would have seen a little bit more of a pretty dramatic decline. Shelter has a huge lag. 2024, we will see a shelter decline. And see, this goes back to what my girl Gabriela Santos was saying on CNBC last morning, which is, look, at the end of the day, inflation's coming down and the Fed's going to have to cut interest rates. And now some analysts are projecting it's going to happen in March. Before, the earliest projection was in May. Even before that, it was like June, it's going to happen. June is the earliest it's going to happen. Then they revised to May. Now you got analysts getting more bullish saying, hey, March looks like a nice time to cut these rates. And so we'll see what ends up happening with CPI, with inflation writ large, but it's coming down. And there's $5.5 trillion, $5.67 trillion on the sidelines. It's very important to remember there are $5.67 trillion on the sidelines in money market funds. They added $62 billion as of November 3rd. That money is going to look at a Palantir that's up 30% in a week. That money is going to look at a Microsoft that is at all-time highs, $2.73 trillion, with, this AI revolution not going anywhere. That money is going to look at SoFi getting $3 billion of deposits, $2.9 billion, but let's round up. In 90 days, now having $15.7 billion of deposits, having 717,000 members, it's going to say, wait a second, why am I in this money market fund when SoFi is growing revenue at 30% year over year? Like, what am I doing? And that money hasn't even entered the markets yet. I mean, today it's definitely not entering the markets. This rally is nice, but this rally is nowhere near $5 trillion entering the market. So 2024 might set itself up to be a phenomenal year if we avoid a really hard landing. And ultimately, I think that is the existential multi-trillion-dollar question as of 2024 is, do we have a hard landing and does everything crash and burn? Or do we have a soft landing and does shit go to the moon and we even get to a higher level than we are from right now? SoFi up 3.69%, S&P 500 up 1.26%, $445 right now. We are seeing Google is up 1.68%. Tesla is up 3.38%. Shout out to Tesla, $232. Absolutely incredible. Amazon at $145. Robinhood up 1.93. Even Virgin Galactic is up $1.96. It's up 3%. Like, it's Celsius. Why is Celsius down at 162? Celsius had a great earnings. Celsius went from 206 to 178. It went up to 188 on earnings day. Now it's at 162. Something happened to Celsius yesterday, and it's really unaffected in the pre-markets. Shopify is up. NVIDIA closing in on $500. $498 on NVIDIA. I mean, this is a lot, bro. This is back to those August levels. Remember, last time NVIDIA was touching $502. Last time that happened, folks, the S&P was at 460. The S&P is at 445 today, and NVIDIA is getting to those same levels. We have NVIDIA earnings on November 21st. Why do NVIDIA earnings matter so much for Palantir, Microsoft, Google, Snowflake, etc.? Because the more GPU demand NVIDIA is able to show, specifically from data center revenue, the more models are being trained. The more models that are being trained, that are obviously having to pay NVIDIA for the chips to be able to, and the compute to be able to train those models, the more software via AI is being garnered and procured, which means the more software that is being garnered and procured off these models means that the third order derivative companies from NVIDIA, like a Snowflake, like a Palantir, like a Datadog, like a Databricks, all these companies are seemingly, from a macro perspective, probably having more demand because they have to, because their software is being in demand more, right, from other clients. And those clients need to be able to train models or use models in order to be able to execute their software at scale. We're not talking about ChatGPT. We're talking about enterprise grade AI within operational workflows across marketing, finance, sales, accounting, AI, ML. All of these teams are going to be using these large language models, and that starts and ends with NVIDIA first and foremost, and AMD, but NVIDIA is really big daddy here. So that is very important when it comes to NVIDIA earnings. It's something we have to keep an eye on November 21st, and NVIDIA touched this level back then. They got to a high of 515 in the pre-markets or the after hours last time they had earnings, but they couldn't sustain it. The market got a little scared. They went below 400. 7 days ago. They went below 400 7 days ago, and now they're at 500. Absolutely incredible. Absolutely incredible. Christian says if NVIDIA crushes earnings, we keep going up. That is correct. Let's check on Verizon. This is another Chris stock. Let's see where Verizon is at. Look at that. Verizon's at 36. Chris called Verizon at 30. Right now, Verizon's at 36. The reason why Verizon is so important is because it's down from about $50, so it's down pretty dramatically. And that means the dividend has increased. At $50, the dividend was at 4.6%. Now at 35, the dividend's still at 7.43. When it got to around $30, the dividend was 7.86%. So Verizon is a capital appreciation play on top of a dividend, which is basically what I'm doing in TFC. So I'm not in Verizon, but for those that are interested in Verizon, Chris has some good DD on it. The number one argument is going to be they have a lot of debt. A lot of that debt is low interest. So outside of that, you know, if you look at the actual book value, Verizon's tangible book value is closer to that $45 range. And that's why Verizon is theoretically undervalued. TFC is the same thing for me. Book value on TFC is around 42. It's at $30, fell at 27. I bought at 27. Dividend is 7.09%, and capital appreciation, you know, probably can get a little higher into those $40 levels. Again, the reason for these regionals being higher right now is because as inflation comes down, interest rates likely will come down. Interest rates are the main reason that a lot of these regional banks are holding massive losses on their loan portfolios, because they issued rates that are lower than the Fed funds rate. Once that Fed funds rate starts to come down, all those losses, Bank of America having about $40 billion of losses on their portfolio, that starts to go away because interest rates have come down, which is so incredibly important for the financial sector of the equity markets. And obviously the financial sector of the equity markets being well influences a lot of other markets. Bank of America up 2.39%. JP Morgan on this data at 147, up 0.94%. KRE Regional Banking Fund up 3.5%. Absolutely incredible. XLF, which is the larger big banks, up 1.18% at 34.26. Not bad at all, folks. Not bad at all. For those that are just joining, CPI came in lower than expected, 3.2 versus 3.7, and that's why we're seeing the market have a nice little bit of a rally. Guess nobody's going to talk about SoFi insider selling now. Look, I still am not a fan of the chief risk officer selling 50% of his stake. I really don't like that. But, you know, when the market goes up, I guess we don't care anymore. But it's still something that's not interesting to me, especially if they knew that, you know, I think the chief risk officer at SoFi probably understands the macroeconomy. He could have reasonably predicted, oh, inflation is going to come down, which means the stock's probably going to go up after November 14th, which means maybe I shouldn't sell it. Maybe I should just wait a little bit and then sell. Granted, I think he sold at $8 and the stock's only at 730. We'll see where it goes today. So he did still in the green on that. So we'll see what ends up happening. But SoFi is up right now, which is good as well, which is awesome. Let's see what else we got in the chat. We're about to go to Cathie. She was on CNBC just now. We'll see what she has to say. Again, if you're just joining, CPI came in much lower than expected, which is why it was good. Let's check on Enphase. I forgot about Enphase. Our beautiful, beautiful Enphase. Look at that, folks. Solar's up $82. Enphase is up where's Enphase? Where's Enphase right now? $82. 5.18%. When Enphase is rallying, that's how you know the market is happy. That's how you know the market is very, very excited. Again, the 10-year at 4.51%. This is another reason why the market's up right now. For those that may have never heard of the 10-year before, it is a government bond that is issued that people can buy, which means you're buying government debt, and they give you a fixed rate for buying their debt. Oh my God. Oh my God. It just went below 4.5. Oh my God. Oh my God. This is wow. Wow. 4.484. Wow. J-Pal's not going to be happy about this. J-Pal's not. Mr. Jerome is punching air right now. He is not happy about that 10-year coming down. And the reason he's not happy is because that 10-year comes down. That means more money goes into the market, which means the chances of inflation going up are a little bit higher. But really, if inflation's coming down this dramatically, I don't think he can be that mad. I think he's got to let us relax and just enjoy some of the gains today. Oh my. Oh my. Bay Ray says, you wait till this shit is crazy. Wait till the market opens. Yeah, I mean, look, we got about 35 minutes until the market opens. Let's see what happens. 446 now on the S&P 500. I think the market's not selling it off, folks. I think the market's going to be like, you know what? We're going to take some fucking risk. Sorry for my French, but we're going to take some risk because America is built on risk takers. The world is built on entrepreneurs. You either take some risk, and yes, sometimes you fail, but damn it, you take some risk. You don't stay stuck in the money markets. You come play with the big boys. You bet on an Airbnb. You bet on a Robinhood. You bet on a Palantir. You bet on a SoFi. You bet on these innovative companies and give them a chance. Now, granted, do you bet on NVIDIA at $500? I don't know if you take that risk. I personally wouldn't. That's a little bit too much of a risk. That's a tough risk to play. But granted, Nvidia's actually cheap. Their forward PE is lower than Palantir's. Nvidia's forward PE is 42. Let me say that again. Nvidia's forward PE is 40 freaking 2. And the reason their PE is so low is because the growth is phenomenal. So maybe investors do bet on Nvidia at this valuation. We'll see. Like the price on Nvidia, it scares people, but the forward valuation, the 4 PE implies more growth, which is why the valuation isn't actually that crazy, even though one may think it's crazy, but maybe it's not. Depends on how you kind of look at it. Amit, I drink my warm milk before bed and use it as a nightlight. My bonds are a good investment. Look, I'm not. Look, if you're in bonds and you're getting that risk-free rate of return, I got some cash in Robinhood collecting 4.9%. Totally understand. I'm just saying the broader investors in this market are not in the equity market. I mean, there are some that are making money, and there's a lot of people like Mike Wilson from JP Morgan, who is pounding the air right now, who said we're going to get to 3,900 on the S&P. But he was wrong. He was wrong. Now, he was right about the 10% correction we saw in September. He called that 420. I don't know if he got his money. Remember, Mike Wilson at the beginning of the year said, we're going into recession. Shit's going to hit the fan. Okay, what happens? We go to 450 on the S&P 500. Mike Wilson, quite frankly, looks like an idiot in front of his clients. These clients, he's one of the head equity analysts at JP Morgan. These clients are like, dude, we don't know how to invest our money. We are too busy making companies and like making sure the world continues to go forward. We pay you 2% to invest our fucking money, and you haven't invested our money because your analysis said the S&P was going to crash. Guess what? The S&P is at 460. It's not crashing. What's going on? And so Mike Wilson came out in July and said, look, we're overvalued. S&P is going to go to 420 by September, and then I'll get in. He was right. I mean, you got to give him credit. The guy's been doing this 30 years. He was right. So he was wrong about 2023. He was right about September. We have that nice 10% correction, almost 12% correction in September. We get down to that 410 range. The question is, did Mike Wilson get his clients' money inside of this market? Did you stuff it in at 410 and let them ride it up? Or were you still scared? Were you greedy? Did you think it would get to 390? I don't know. I actually don't know. We got to get an update on that. But at the end of the day, this is what I mean by equity markets, and a lot of fund managers still don't have a lot of their money in the markets. And if that comes in, then that's going to be really good. TFC is rallying. This is a company I have a lot of money in. TFC does well this year. I make a lot of money. I make life-changing money if this happens with TFC. So this is one of the, and again, the reason I like saying this stuff is because this is why we're invested in the freaking markets. We are not here. 757 people here. Thank you for being here. If you're just joining in, CPI came in at 3.2 versus 3.7. That's why the market's up. We are not here putting our money into these companies, doing all this due diligence, following the day-to-day, understanding who Jerome Powell is and making jokes about him when half the world, or probably more than half the world, has no idea. Your best friend doesn't know who Jerome Powell is. We are not here to not try to get some level of financial freedom by allocating capital to high yielding assets that if we give it enough time can produce a return. And so if TFC does well, I make some life-changing money, which is incredibly important for me. And that's why I follow the equity markets. That's why I'm interested in the equity markets. That's why I spend my time doing research about the equity markets, because 99% of people will not put in the due diligence to try to figure out if a stock like TFC that is trading under book value, that has a 7.7 dividend, blah, 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 could it actually go up? And if it goes up because you took a calculated risk on trying to see the asymmetry and arbitrage in that opportunity, could you make some life-changing fucking money? That's why we are here investing in the stock market. That's why we're here. And as I say this, if the market opens and TFC collapses, I'm going to be saying this again and just waiting until that sucker goes up. But that's why we do this. That's why it's fun. That's why it's exciting. That's why I love the media aspect of covering all this stuff, because this is exciting. How could you not be excited around not just making money, but the process it takes to try to make the money, which is picking the stock that actually does well, right? Or picking the index at the right time so that it goes up. I mean, this is a game, and it's so exciting to play this game every single day. Tesla's up $12 in the pre-market. They just raised prices in China. Oh, wow. Did not know that. Did not know Tesla raised prices in China. That's actually news to me. That's actually bullish, folks. If someone has an article for raising prices in China, put it in the chat, because that is incredibly bullish. If Tesla raised prices in China, that means they may have a little bit of, that means they may not have that many demand problems from BYD and all that stuff. What else do we got here? What strike do we have on TFC? 45. Well, I have a spread, right? So if it's above 30, which is above 30 right now in the pre-market, I'm in the green. If it gets to 45, I make a lot of money. Like, I make a lot of money. I just make a lot of money. And I have till January 2025 to see if that happens. So even if TFC gets like 35, 36 bucks, which it was at 5 months ago, by August of 2024, that's when I plan to get out of the position. I'm going to make a lot of money. And you know the other reason I'm really excited about this, and then we'll go to Cathie Wood. We'll see what she's talking about. 30 minutes until market open. Thank you all for being here. The other reason I'm excited for this, and I think a lot of people will resonate with this, is my parents had no financial literacy when they came to America. I mean, my dad started a liquor store. He really came from the ground up. He worked at a gas station, started his own company. Like, my dad was making money 10 years ago during the FANG boom, but he never realized, hey, if I can take just like $1,000 a month from the revenue I'm getting from this liquor store, and I just put it into Apple, I put it into Google, put it into Microsoft, I take a little bit of risk. I see a little bit of the opportunity behind the horizon. I learn about interest rates. I understand how bonds work, blah, 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 blah. If I just do that for a month, for a month every single year over the next 10 years, that, 20, 30 grand I invested could literally become hundreds of thousands of dollars, because they're in these high quality assets that are actually performing in the revolution that we have on planet Earth, which is technology, AI, etc. And I could set up my retirement. I could set up my funds for my kids, et cetera, et cetera. He had to work his entire life. My mom had to work her entire life. She had to get a salary, go to the boss, report. Investing in assets is investing in financial freedom for yourself and giving yourself the opportunity to take control of your own fucking life, which is why this is so important. And that's another reason I'm super passionate about doing well in the market. I haven't done that well over the past 5 years. I'm just going to be honest. That is, I sucked at it, quite frankly. And I think you got to go through some of that pain to get good. But if you do get good, then, I might be able to help my parents do well because they just didn't have access to this information. So we'll see what ends up happening with some of the equity markets. Sachin in the chat, in days like today, think about taking profits on short-term investing today and tomorrow. In 2 days, CNBC and mainstream media will be pumping fear again. That is also very true. I mean, on days like this, if you're in a position, I know Sachin just initiated a Robinhood position, 20,000 shares on Robinhood. Sachin, you don't think I didn't miss that tweet? You went Big Daddy on Robinhood. We saw that happen. So maybe if Robinhood goes to $10 today, I don't think that's going to happen, but imagine that does happen. Maybe that is a little bit of a profit taking moment, right? You take some profits there because the tides may change. The one thing also I've noticed as well, and then I'll get to Cathie Wood, is markets also go down, right? Today's one of those days where markets are up. We're excited. It's super fun. It's great. It's awesome. Robinhood's up, blah, blah, blah. But then tomorrow the sentiment changes, markets go down. And this is another reason why it's so exciting covering the equity markets, because things change in hypersonic speed. And ultimately, I think on the long term, right, you shouldn't try to time the market. It's very difficult to do that. But if you're in a speculative position and you're in it for the hell of it, this might be a day to get out of that position and take some fucking profits. Like that. Like, do not let anyone tell you that's not a good idea. Long-term position, sure, you want to let it ride. Like Palantir, I still wouldn't even be selling at $20 today. I would let that sucker ride. But if you're in a more speculative position, it's not necessarily the worst thing in the world. I want to give one shout out real quick before we move on to Cathie Wood, to my good friend, TJ, the Wheel Deal. He's a friend of the channel. This is the Wheel Deal right now. For those that don't know his channel, if you just type in TJ, the Wheel Deal on YouTube, he's a really good friend. I met him in Vegas. The Wheel Deal came down with a condition called sepsis. I'll be back on YouTube as soon as I have a clean bill of health. TJ, I just want to give a shout out to you. I wish you the best of luck and health. You got to take some time off. He live streams every single day. He came to me a year ago and he said, Amit, I see you're doing YouTube. I want to do YouTube. How do I do YouTube? I said, bro, just keep grinding, go live. People will, resonate with your personality, and then you just keep consistent at it. And now he goes live every day and has an audience that listens to him and loves his content. So TJ, just wishing you the best, get better soon. And we'll have you on YouTube soon. And we'll keep wheeling and dealing, as you say, in the equity markets. All right, let's check Cathie Wood. And see what she had to say. She was on CNBC. Actually, let's do Dan Ives first. He was on yesterday. He said the AI bull revolution has started. He's been very consistent. I interviewed Dan Ives on Twitter Spaces a couple of months ago. And his argument, when I asked him, and Arnie as well in the chat who was with me, we asked him, hey, Dan, what about the macro? Like, macro sucks. See, inflation's high. And Dan, through Twitter Spaces, said, quite literally, F the macro. I don't care. I'm part of this AI new bull revolution. We have not seen anything like this since 1995. Let's get his updated thoughts on where the market is going.
Joining us here at Post 9 today, Dan Ives, Wedbush Securities Analyst. Dan, it's great to have you
great
back.
To be here.
Sounds like you think it's going to be all about spending and use cases, which are going to explode in the coming quarters, I guess, yes?
Yeah, to me, it's all about use cases. We right now have about 80 use cases for AI based on all of our survey work. 3 months ago, that was 15 to 20. And I think that's what we're seeing even in earnings. If you look at Palantir, you look at Microsoft, you look at Datadog, Now it's the first, second derivative, and we believe the third and fourth are going to hit in 2024, which is what, in my opinion, the new tech bull market has begun.
Is that going to begin to manifest itself and ignite in some of the AWS reInvent events?
Yeah, I think it's going to be front and center. I mean, you saw it with Nadella. I think now you're seeing with Jassy, AWS, Google, clearly, Oracle going to be another one. I think that's the key from an install-based perspective. You look at Adobe, you look at names like Oracle, you look at Salesforce, and of course, right now at the top of the mountain is, of course, Microsoft. But you look at what AWS is doing, that's a huge monetization opportunity for them. And I believe right now that's the golden goose. That's what this is going after. And we think it's $1 trillion of spend over the next decade. It's going to hit the shores of tech.
Enterprise tech only or consumer tech too?
Well, I think enterprise is 8 to 10x the opportunity right now of consumer tech. Now, when you look at consumer,
let me pause on that real quick. I agree with Dan Ives here. Everyone's going crazy over ChatGPT, all that stuff. I think enterprise is a much bigger opportunity than consumer. I've seen the consumer use cases of AI. It's big. I don't know what the monetization looks like. I don't know if it's the iOS App Store in 2008. I think enterprise is where the money is at, and that's why we're seeing some of these SaaS companies do well.
Consumer tech, I think that ultimately is the latter part where we're going to really see the Googles, the Metas, the other from a consumer advertising perspective. But Sarah, right now, the use cases that we're seeing explode is an enterprise.
What are you seeing that others are not seeing, that have already seen the run up in these stocks so far this year and have said they've dominated? And if the rally is going to expand, we need to see more participation, not just from the tech stocks.
Sure. And I think for us being in Asia 2 weeks, I mean, we saw it front and center in terms of not just use cases, but what the suppliers are talking about. You look through the supply chain, I think it all starts with chips. And I think what we're really seeing is right now an underestimation of what the demand looks like from the chip sector and from software. And I think when you look at names like Microsoft, that first now is starting to see these use cases explode. Datadog, I think Palantir is sort of the golden child of AI. That is how it's all going to form. And in terms of, to Sarah's point, the next wave is going to be broader tech in terms of small, mid-cap. And I think right now, a lot of bears, they're coming out of hibernation mode. And I believe they go back in terms of what I view as just a tech that ultimately could be up 8 to 10% more going into year end.
I'm trying to understand this use case thing, though. I mean, all right, we co-pilots out there, we can get a sense for that. And then there's this idea that there are going to be a lot of other tools shared by the big players for smaller enterprises. But what are you talking about? Are you saying use cases from a lot of companies for their customers, or are you talking about Microsoft providing all sorts of stuff into the enterprise?
Yeah, it's use case. I think nail on the head. It's use cases for that companies we're talking to across verticals, from life sciences, pharmaceutical, financials, government, where they're now seeing the use cases, clear ROI. Now they're building it. Where are they building it? On Microsoft, on AWS, on Google, on GCP. And that's why what we're starting to see right now in earnings season is you're starting to see the next phase of that. It's not just NVIDIA. Now you're seeing Microsoft, Datadog, Palantir. I ultimately believe Snowflake, and I think many other Salesforce included. And I think that's what we're going to be talking about. You've always talked about use cases. What are the use cases?
Yeah.
We've done survey with, 670 enterprises. 80% of them said that they plan to aggressively spend on AI companies in 2024. We think it could be up to 8 to 10% of budgets from less than 1% today. That is really.
So what's going on? Is it the learning curve?
All right. So that is what I wanted to share right there. Dan Ives, big, a lot of stuff we got to analyze right there. Let me just get this set up real quick and keep going from there. For those that are just joining, thank you all for being here. CPI came in a lot lower than expected, 3.2 versus 3.7 last month. Analysts expected 3.3, so came in below expectations. Energy fell 2.5% month over month. Gas fell 5% month over month. Shelter was up, so that offset the decline in gas, but nonetheless, we got a fantastic CPI report in terms of inflation. So what did Dan Ives just say that was really important? Number one, the argument that enterprises are probably going to be allocating 8 to 10% of their budgets to AI next year. That's a big deal. I mean, enterprises spend a lot of money on a lot of things, and to have 8 to 10% of that capital being spent on AI, well, where's that money going to go to? It's going to go to a Palantir. It's going to go to a Snowflake. It's going to go to a Datadog. It's going to go to a Databricks. It's going to go to these SaaS companies, all of those that I mentioned in the valuations from 30 to 50 billion that are in the early stages of building their respective empires over the next decade. Hopefully, you know, those companies turn out to be multi-$100 billion companies over the next 10 years. And in order for them to build those empires, they need to be able to show that they are a pivotal element in an enterprise's ability to become more productive, create more revenue, decrease costs, and most importantly, increase their operating income margins, which essentially means become as efficient and productive as they can possibly become. How do you become efficient? How do you become productive? How do you not lose money on stuff that doesn't matter? You operationalize your workflows via something like AI. When marketing gets more effective, when sales gets more effective, when financial accounting becomes more effective, when all these operations, when energy and when supply chains become more effective, this transforms the entire business. And that's why one of the things Dan Ives was poking to in the clip was he's seeing through his conversations, and he talks to a lot of people, travels all across the entire world. Whatever opinion you have of him, the guy, him and Tom Lee, they talk to a lot of people. Tom Lee talks to 100 people a week. So, like, I mean, they talk to a lot of people to get a gauge on what's going on in the economy. Life sciences, pharmaceutical, manufacturing. There's a variety of industries that are finally discovering the use cases for AI. And if they're discovering the use cases for AI, well, damn it, that means that the cloud companies that provide AI infrastructure, like Sachin puts in the chat, rise of AWS and Azure revenue is clear proxy of enterprise rise, and AI is just starting with a wide range of use cases. AI adoption for existing and new demand will be massive. Those cloud companies benefit. The companies that actually implement AI infrastructure, like a Palantir, will be productive. The companies that supply the GPU demand to be able to train all the models, like NVIDIA, AMD, they will be productive. I mean, the point I'm trying to make here is that this is a broad sector, I hate to use the word revolution, but revolution that's going on in the equity markets in regards to a wave of growth. And I think one of the things I realized as an equity investor is the market is looking for where is growth coming from, right? CPI was at 3.2, not 3.3. CPI was there at 3.2. The market is looking at where is the growth coming from, right? And the growth needs to come from somewhere. And in order for the growth to come, the market needs to get excited about where the growth is coming from. And at the end of the day, the market seems to be excited around AI, whether it's premature or not. From all the research I'm doing, it seems like it's very real, that growth's going to come from AI. And if that growth's going to come from AI, then the companies that are affected by AI are going to be the ones that get there. Shout out to TJ in the chat. He is on morphine right now, but we in here. TJ, I gave you a shout out just 20 minutes ago before you got in here. I'm going to do it again right now. Everyone wish TJ well. He has a little bit of a serious condition right now. Came down with a condition called sepsis. I'll be back on YouTube as soon as I have a clean bill of health. That is TJ's Twitter. There he is. Right there. TJ, I wish you the best of luck, man. We're sending you a lot of well wishes. TJ's a good friend of the channel. I was just with this guy in Vegas 2 weeks ago. Me and Chris, we were playing craps with this guy in Vegas. So TJ, I wish you the best of luck, man. Equity markets, none of this shit matters at the end of the day if you don't have your health. So that is the first and most important thing. And honestly, you got to have your health, and you got to have people that care about you and love you. And TJ, I'm one of those people that care about you and love you. And I hope you get well, because we need you real in the deal. We need your 500,000 shares of SoFi to print so that I can get on your private jet one day, because I don't have 500,000 shares of SoFi. So you better fight your ass off in that hospital right now, because I need to be on the jet as well. You know, I'm saying this kind of selfishly, even though I'm supposed to be selfless right now, but I want to be on the jet when SoFi gets to $20 and you have fucking $100 million or whatever the hell you have. So TJ, get better, man. And we are all wishing you the best in the chat. Everyone here is wishing you very well. Okay, let's move on so that was the Dan Ives clip. We talked about that. We got 15 minutes into the market open. Let's get into Cathie. We got to see what she has to say. You know what? There's going to be some Cathie slander in the chat. I get it, but it's Cathie. At the end of the day, she's magnetic. She has a personality that attracts people. She's exciting. People want to learn from, people want to hear what she has to say. Whether you believe or don't believe in her, she is someone that gets people excited, and she gets the views. Like, at the end of the day, Cathie, she gets the views. So we got to listen to Cathie. We got to hear her perspective. She did get Tesla right. We know she got Tesla right. So it's always nice to hear from Miss Cathie Wood. I love Cathie. I know a lot of you don't like. I love Cathie, I love Cathie, especially when she decided to get back in Palantir in May of 2023. That's when I really loved Cathie. You know, before, when she sold off Palantir, I was like, Cathie's what. Now I'm a lot more of a fan of Cathie. Let's hear what Cathie has to say about Tesla. Tesla's up $233 in the pre-market, and let's see what she has to say. Here we go.
Autonomy, vehicle autonomy, of ETF all around it, robotics and the like. What do you make of what's happened with Cruise?
Yes.
the shutdown of cruise, at least the temporary suspension of it. Derek Khosrowshahi, who runs Uber, was on the broadcast last week. He said he doesn't think that autonomy, in terms of autonomous vehicles or robo-taxis or the like, are a real thing for another 5 or 10 years. Meaning he's, and by the way, I think 5 or 10 years ago, he would have said 5 or 10 years ago, that was what, you know,
so would Elon, yes.
And so here we are.
Yes.
So what, have you changed your view about that? I mean, you must have, because I imagine if we go get tape of a conversation that we all probably had 5 or 10 years ago, we probably said 5 or 10 years from now.
22, 23, 24. We actually delay ours by 1 year relative to Elon, so maybe it should be 2 years. But here's where we've learned how important Tesla's proprietary data is. It's 5 million robots around the world. Cruise didn't have anything like that. It had hundreds. 5 million robots around the world collect data every day and send it back to Tesla. Tesla has more corner cases, which means disengagements, accidents, information like that, than all the other companies in the world combined. And I have to tell you, watching the breakthroughs in AI that we are seeing, they are astounding, the speed at which this is moving. So it is interesting. I think it's a data issue. Autonomous taxi platforms are the biggest AI project in the world, and therefore we think Tesla is the
but
biggest
you've sold Tesla shares, and it's it used to be the #1 holding, I believe, in your ETF. It's now number 3. You've sold about 20 million shares.
Yes.
Why?
So well,
Okay, before she answers, I want to know the answer to this question as well, because she sold a shit ton of shares, and she quite frankly sold at the top, 260, 270. So I want to see how she squiggles her way out of this one.
whenever it goes up, it was up about 150% relative to our other names, many of which had not moved. So we will always recycle that way, take profits. And I would also say, listening to Elon on the last conference call, he's very concerned about the economy, as we are.
Cathie, will I look outside?
Okay, so she's blaming Elon. He didn't give her confidence, and she says the stock is up too much, which is not the worst reason. I mean, the stock's up. Yeah, he takes some profits, and Elon, we all can all agree that conference call was not good. So, I mean, yeah, I guess that's a reasonable reason.
5 years from now and see GM and Ford EVs everywhere.
It's very interesting to hear both of them pull back saying,
But do you think with this new way, I think, I don't even know if we'll be talking about GM and Ford in 5 years.
what is interesting about the news that both of them are pulling back for profitability reasons, they can't be profitable in this space unless they scale. That's how this
That's
works.
a catch-22.
So it's catch-22, and their shareholder base is very internal combustion engine oriented, and they want their profits now, and they want their dividends now. And they don't want that kind
So how
of
are they going to do it?
losses.
Will they be able to?
I don't know. I don't know. All I know is, back to the Tesla question, as they are pulling away, our market share expectations for Tesla go up.
Right.
You know, and so to answer the question, we sold as it was up 150% relative to everything else. We have not sold much since then. And it will, if we're right on this autonomous taxi opportunity, it will remain in the top 5 in our fund, in our flagship.
Let me show you how I transformed this summer mood board into one perfect.
Okay, cool. So that is Cathie's update on Tesla and why she sold some of her Tesla. Obviously, she says if it continues to perform, it'll be the top 5 in her fund. I would imagine if she has this $2,000 price target on Tesla, it's not going to leave the top 5 of her fund. Right now, I think Coinbase is at the top, given some of the weighting that she has on Tesla. If you are all joining right now, thank you 956 people for being here. CPI came in lower than expected, 3.2% headline CPI versus 3.7 last month. And that's why the market is rallying. Thank you all as well for the get well wishes for TJ. We got Alice with get well, Marginal with get well, SJ with hearts for TJ. Thank you all for the well wishes on TJ. He has a condition of sepsis. Todd says get well as well. Just texted him right now. He's going into surgery today. So TJ, wishing you the best of luck on surgery, and we're all here for you. And we're all rooting for you. All right, Palantir, $20.12 in the pre-market. Let's get an update on where some of these stocks are going in the pre-market. If we got a market open in 11 minutes. Again, for those that are just joining, CPI came in at 3.2%. Energy is down 2.5% month over month. And Shelter is up month over month. But energy is down so dramatically that's why we're seeing the overall decline in CPI at 3.2. The market was not expecting 3.2. They were expecting 3.3 as the best case and 3.5 as the base case. SoFi up 4.69%, 7.37. S&P 500 446 up 1.35%. Truist $30.49. Bank of America's up. JP Morgan is up. Enphase is up 6%. Look at that, $83 on Enphase. Amazon up 1.83, and then Palantir broke 20. Palantir has broken $20. $20.09 top at the pre-market was $20.21 or 2024. We hit an all-time high today. And Palantir is up currently in the pre-market. Market likes it. Market likes it a lot. On top of that, folks, and we didn't get to spend too much time on this because we transitioned to CNBC right when I reported it, but this 10-year has come down again. So when I saw it go below 4.5, I was like, oh my goodness, it's at 4.49. Now it's at 4.469. Now it is even lower than it was just before. Let me pull it up real quick. 10-year is coming down. That 10-year coming down is also really good for equity markets. 4.467. Look at that. It went down just a little bit from when I just announced it right now. Again, that 10-year comes down. More reason for equities to rally. Inflation's coming down, so there's not that much of a need for people to want to be in the bond market because they see more risk-on opportunities in the equity markets. Now the question is going to be, as we get into the market open, 9 minutes from the market open, does this rally sustain itself? I personally will go out there and I say, I think we rip. I think we go higher. I think the market likes it. Maybe some stocks are a little, like for example, Microsoft at all-time highs in the pre-market. Do I think Microsoft's going to rip as soon as the market opens? If I had to guess, I would say no. Maybe it goes up a little bit. Maybe, might not rip because it's already at all-time highs in the pre-market, right? But does it necessarily go down dramatically? I don't think so. Nvidia is at 498 in the pre-market. Does that bad boy run to 515 or does that bad boy sell off to 480? If I had to guess, I would say 515. I'm probably wrong because I'm putting it out there. But just based on what we're seeing, the market momentum is on the side of green going into 9:30. And so we're going to see what ends up going from there. Amit, you always say all-time high for Palantir. I'm sorry. I meant to say 52-week high. Sorry. I meant to say 52-week high. All-time high for Palantir is still $45. So I am sorry for that. It is 52-week high. What qualifies as a face ripper? That's a good point. I think S&P to 450 today is a face ripper. We started at 440. We're at 446. If we go to 450, that's up, 2-3%? I think that's a face ripper. 450 psychologically as well is incredibly important for the S&P 500. I definitely think that would be a face ripper. So that would be the case. Meta is up $7 as well. Let's pull up Meta. I actually made a tweet last night before I slept. I sent out this tweet and then I went to bed and then Zuck showed up in my dream. The tweet was, one could argue Meta, look at that, $335. Goodness gracious, $840 billion market cap. Ladies and gentlemen, this company went from $88 in November of 2022 to $335. This is why the U.S. equity market is the best freaking equity market in the world to be invested in. Whether or not you like Meta, I know half the chat probably hates Meta, half the chat loves Meta. The fact that a stock can do that, the fact that they can make $34 billion off Instagram commercials, bro, Instagram ads, they beat revenue by $1.6 billion last quarter and the stock fell to like $280, which is insane. Because of Instagram ads, which was the majority of the revenue, Facebook, Instagram. I'm being facetious here, but you get my point. This is why America is one of the greatest countries in the world. This is why some of these companies are built in America, because they can happen all through relentless innovation in the United States. 4 billion users, 335. I put out a tweet last night saying one could argue that Meta is the most powerful company on earth. And I put out that tweet after thinking about it for a couple minutes. And I was like, you know what? I'm going to tweet this because one could make the argument the power Meta has and the billions and billions of users and the fact that they're growing hundreds of millions of users every couple years, they control most of the world's information. Now, that may not be a good thing. A lot of people probably think badly about that, but I don't think it's that deniable that Meta could be one of the most important companies in the world and one of the most powerful companies in the world as well. And so we'll end up seeing what goes on with Meta, but congrats to Meta shareholders at 335. To give you all a little bit of context on my experience with Meta, because we're honest here and I make a lot of mistakes because I'm not the best investor in the world. I bought Meta at 325 in February of 2022. Okay, so I bought, or actually, no, it was like January. I bought Meta at the top before the crash. It went down to 240. I got out of it. It was only 10 shares, so I lost like $1,000. And I took that 2,400 I had and I dumped it into Palantir at $12. So I took my Meta losses at 325 average to 240, dumped it into Palantir at 12. So that did well. But I never got back in at 88. And this is one of the mistakes I made. And this is, I'm pretty sure a lot of people can resonate with this. When I dumped Meta from 330 to 240, great sell, phenomenal sell, because the sucker went down to $88. But what I didn't realize, and this is part of my journey, and this is what I think everyone can resonate with at some perspective, is like, wait a second, you had a thesis on the stock. Like, you believed in the company. There was a reason you bought it at 325. I mean, like, I don't think I was fully an idiot for buying it at 325. Now, valuation wise, I was definitely an idiot, but like, I had a thesis on Meta. When it gets to $88 and it's trading at a forward PE of 6, maybe you should look at that thesis again. Maybe you should just think about that thesis again, especially when you got Chris Patel yelling in your ear to look at Meta and you still don't look at Meta. And so, this is one of the things I've learned, is that if you have a thesis on a stock and the stock declines and nothing really has changed in the business, I mean, really, Meta did good. It just had a lot of employees that they had to cut because they had too much fat. Maybe you should take another look and see what's going on, and realize that, maybe there's something there that you noticed before. Arnie says, when the Meta stock started to drop, it was because nobody uses Facebook. Nobody talked about Instagram. Yeah. And Facebook was growing too, which was insane. Like, this narrative that nobody uses Facebook, maybe in America, but you go to different countries like Nepal, Facebook is the news, right? Like, Facebook, you go to countries like Kenya, Nigeria, Facebook is where they get their source of information. So maybe for us, Facebook's not as relevant anymore because in the West we've evolved past it. But there's a product called Facebook Lite. People should look it up. It is a very thin version of Facebook on Android devices that gets like 50 million downloads every month if you look at App Intelligence. So the idea that no one uses Facebook is ridiculous. And the fact that I didn't realize that was also ridiculous. And the valuation on Meta was stupid. It was a $200 billion market. It was a $200 billion market cap doing $120 billion in revenue. I mean, like, if you just care about making money, that was the place to make money. And I was convinced, or I was starting to believe, it's going to become the next Yahoo or AOL or any of this nonsense. And so this is when that opportunity comes again, because it will, not on Meta, but maybe I'll be, 10 years older and there will be a stock, because these things happen not once in a lifetime, probably once every decade. I will be ready for that opportunity. Hopefully I'll have some more dry powder at the time. I had 25 grand at the time, October 2022. I remember my Robinhood balance. I had 25,000. I was looking at it and I saw Meta at 88. If I just put that 20, let's do the math. Let's just be fun. With 3 minutes until the market open, 25,000 divested at, call it $90. Today would be worth 93,000. So would have been a little bit more than a 3x. Would have done well. It is what it is. You live and you learn, and you got to keep moving forward and keep going from there. PayPal, I forgot to check on PayPal. 3 minutes until the market open. Thank you, 1,041 people, for being here. If you're just joining, CPI came in much lower than expected at 3.2, which is why the market is rallying. If you are new to the channel, I do 2 shows, 1 episode on Palantir every day, and then a market open. So if that has any interest to you at all, please like and subscribe. If you're interested in Palantir content at all, 1 episode every day about Palantir. And then if you don't care about Palantir, the market open from 8:45 to 10 a.m. every day. We talk stocks, the economy. That's where I talk about everything. And the actual video every day is just Palantir. PayPal, $55.60, up 2.2%. It's a face ripper if you can get PayPal to move. I saw a meme yesterday on Twitter where someone was like poking a rock. And underneath the rock, the caption was like, this is us talking to PayPal every day. It was like, move. And the rock obviously will never move because it's a freaking rock. So like, the fact that PayPal's up 2% somehow, goodness gracious, PayPal. I mean, that's how you know the market's doing well. 2 minutes until market opens. Palantir, $20.06 in the pre-market. Meta's up 1.73. Enphase up 5.7. In the next 2 minutes, we're going to see if the market sells off or if the market continues to go forward. That's what we are going to find out in the next couple of minutes. Do we go forward or does the market sell off? It's going to be really interesting to see. SoFi, look at that, approaching 5%, up 4.97%. Google's up, Tesla's up 235. Let us see what ends up happening as the market opens in about 1 minute. What do we have? The opportunity is PayPal. Yeah, I know you guys are saying the opportunity is PayPal of Meta at 88. The only problem with that is PayPal's not a tech company like Meta. PayPal's I love PayPal. I use the product every day. I literally use the product every day. Like, I pay people with PayPal. I get money in PayPal. I used it this morning, but it's not Meta. It's not printing the way Meta prints revenue. Like, it's not as innovative as Meta. So that's why the comparison of PayPal and Meta, valuation wise, maybe. I mean, valuation wise, sure. I'll give you that. It's Meta at 88 valuation wise. I'll give it market cap of 42 billion. Or sorry, I'm looking at Palantir. Market cap of like 60 billion on PayPal, 58 billion. But in terms of its stock price tripling that quickly, Meta tripled in less than a year. I don't know if that's going to happen with PayPal. We'll see. We'll see if that ends up happening. All right, here we go, folks. We've got 10 seconds until the market opens. Thank you 1,000 people for being here. This is the second time we've cracked 1,000 on the market open. 2 weeks ago, we had 969. So really nice to see 1,000. Hope you guys get value out of the stream. This is a passion of mine. I love covering the stock market. It's fun. It's exciting. Hopefully it makes it fun and exciting for you. Ladies and gentlemen, 9:30 a.m. CPI data is out. Let's see what happens with the market. The stock market is now open. Wake your ass up. It is time to discuss what's going on in the broader equity markets because we are all equity investors and we are trying to make some money from the equity markets. PayPal up 2.2%, Meta 1.59%, Palantir opens at 1988. So it sells off the $20 high that it just got to. It's reasonable. You could understand that. $20 is a lot of premium for Palantir, so the market took some of their profits there. 9.9 million shares have been traded within the first 45 seconds as the market opens, counting the pre-market as well. So we got 10 million shares in volume, 1979. We'll see. Palantir tends to come down a bit and then rally right back up after you give it about 10, 15 minutes of the market open. So we'll see what ends up happening, and we'll see if we can touch that $20 range again. Enphase up 7%, $84.06. XLF, big financial sector ETF, up 1.2%. That's all the big banks like Bank of America, Citi, JP Morgan, etc. Regional banks are up $43.19 on the KRE, up 4.1%. JP Morgan 147, Bank of America 28.59, TFC up 3.37%, $30.34 on the day. So we got TFC that is up. I have just looked at my portfolio, folks, and I am up $6,478 on the day. Put in the chat if you're looking at your portfolio right now, because we don't know if these paper gains are going to last for the rest of the day, but put in the chat how much you're up right now and I'll go through them in a second. Verizon, $36, S&P 500, 446, up 1.43. SoFi, a little bit lower than when the market was, when the pre-market started. We were at 737. Right now it's 727. Not bad. SoFi up 3.27%. Apple, 186. Apple is so exciting at 186 because this bad boy was at 165 just 2 weeks ago. So right now seeing it at 186, really interesting. All-time highs of Apple at 197. Amazon at 145. Even though Lena Khan is going down Amazon's neck, Amazon continues to do well. Amazon touched 105 about 3 weeks ago. Amazon now at 145. Not bad at all for that. SMCI 265. Microsoft 370. Microsoft just below its 52-week high, which is the all-time high in the pre-market is at 370, 165, 370, $2.76 trillion market cap on Amazon. Google fell from 143 to 120 after missing cloud revenue expectations by 20 million. That was a dip. That was a dip to buy. Google is now at 134, up from that 120 range because that was a stupid reason for the stock to fall. Tesla, 233. One of the Indian head of states was at the Tesla factory at Fremont, California yesterday, observing everything going on in Tesla. Elon Musk publicly apologized to him, saying that he wished he could have been at the meeting with him. Tesla's getting more excited about India because rumors have it that India is getting ready to cut some of their EV tariffs that they originally had on all companies that were trying to manufacture or import EVs into India. India is a global market, 1.4 billion people, 800 million people just on the internet. A couple of years ago, it was 400 million people. So they've doubled the amount of people using broadband internet. I mean, like, just even thinking about Starlink in India is absolutely incredible. India is one of those places where Elon needs to have a good relationship with, and it seems like they're getting a better relationship. Tesla up 233, was at 214 in the pre-market. Snowflake 164, Datadog 106. Datadog, again, it's up like 34% after that amazing earnings, and that's why Palantir, Snowflake, all these SaaS companies are doing well. The rally is good enough to get Lucid up 5.67%. So we got Lucid doing well. Lucid was at 52-week lows at $3. Lucid's up. Rivian's at 1675, up 3.4%. Let's check on Bitcoin. Bitcoin not really doing as much as we thought. I mean, maybe the argument is inflation comes down, which is why Bitcoin is not really a hedge against inflation anymore. So it's not that big of a deal. But Bitcoin, I guess 36,601, 85 points up, nothing too crazy. Riot is up. Coinbase is up 1.4%. Marathon is up. CleanSpark is up. Unity is up at 2084. Robinhood, I have a big position in this company as well. Robinhood is up 3%. Robinhood, not bad at all. And so we see Robinhood continuing to get a little bit of momentum as well. Uber is up after their earnings. Adobe passing $600. Goodness gracious. This stock was at like 200 at the beginning of the year, just some insane level. At the beginning of the year, it was at, I was right. Well, it was at 320. It was at 272 in October of 2022, then 320 in January. So almost doubled Adobe. It is the company around editing software. Their AI tools are just absolutely phenomenal if you've used them before. So Adobe getting a lot of that AI premium. Celsius at 162. This is down after earnings. Airbnb at 124, up 4%. Netflix up 447. That's up a little bit. Square is finally breaking out a little bit, up 4%. It's up 20% after earnings, but it was stuck in that $50 range. Now at 54. Shopify at 65. Nvidia 494. So we saw Nvidia hit 498 in the pre-markets. Right now the market's saying, all right, we're not going to give you $500. We're going to keep you at 494. We'll see where you can go from there. ELF's at 101. This was at 95 in the pre-markets. So ELF continuing to go higher. Meet Kevin's PP, $22.70. Meet Kevin bought 83,000 shares of Palantir at $18.80. He is now at 4% of his ETF inside of Palantir. So Meet Kevin is up 3% on the day. Enphase is up 9%. Wow. This kind of feels like a rally. Enphase up 9% is a big deal. Enphase, Enphase has been depressed for a while. Not bad on Enphase. Palantir 1994 inching a little bit higher to that $20 range. It was at 1970 just a couple of minutes ago, down from 2014, 1993 on Palantir. Meta 335, PayPal 56. PayPal up 3% on the day as well. Not bad as well. Let me see what you guys are up in the chat. We got Victor Hernandez up 3,000. We got George up 6,000. We got MJ up 54,000. Dolores, Dan Harkley got us up 3,700. Benny's up over $1,000. Jamie's up 1,200. Philip is up $800. STS up 8,000. 2UO Moss is up 90,000 on Tesla. Congratulations. Not bad at all. Josh is up $5,200 on the day. People are making money today, even if it's on paper. So last time Palantir went this high, I went to Wendy's and I got 2 4-for-4s, not one. I got 2. They got $8 out of me that day. It was actually like $12 with the fucking inflation, but you get my point. You know, you start to eat good on the days where these stocks do well. Verizon at 36, SoFi 738, Bank of America 28.95. Not bad at all, ladies and gentlemen. Meta 334 as well, $860 billion market cap. PayPal 55.95, Palantir 1990. Not bad. Not bad, not bad, not bad at all. Looking at the US 10-year, oh my God, this 10-year is not holding up. Oh my goodness. 4.443. It was at 4.685 this morning. Goodness gracious. Goodness, that's absolutely incredible. Again, that 10-year coming down is really good for equities. I am now up $7,716 on my portfolio now of stocks. It's incredible. It's absolutely incredible. And again, this is why we invest. This is why we, for days like this. Now, I'm not taking any profits today. I'm gonna let things chill out, but this is why we invest, because you can't be up $7,000 randomly at your job unless you're like in tech sales and you close a bunch of deals, then you get a bunch of commissions. On a regular day at your job, you have a set income, a set salary, and you make your money, and then you pay Uncle Sam, and that's how it goes. In the equity markets, when you take control over your own destiny and you decide that you can allocate your capital in your own ways, you have a chance to really make a difference. So equity markets are up, and we're seeing some really, really interesting results here in what we've got in regards to the broader market. Let's go back to Cathie Wood and see what she has to say on Bitcoin. Bitcoin's obviously gone up really well. Let's play about 2 minutes of this. Let's hear her thoughts on what she has to say and what she thinks people don't understand about Bitcoin. Here we go.
ETFs, and then I want to go broad and sort of get your sense of where the market is and where crypto's going and what's happening here. But tell us about these ETFs specifically and what you're trying to do.
Yes, with our partner 21 Shares, which is the largest crypto ETP provider in the world, mainly European focused, we are launching 5 ETFs. The strategies are going to be around Bitcoin futures, Ethereum futures. One will be Bitcoin futures and cash. One will be Bitcoin futures and Ethereum futures. And then the last one will be broader Bitcoin and companies exposed to digital assets, equities.
How much of this is a dress rehearsal in your mind for a moment in which the SEC says, okay, cat's out of the bag, you can actually issue an ETF that's directly invested in Bitcoin?
Well, it certainly is a dress rehearsal. We think there's a place. I think these strategies will be more probably institutionally focused, and I think the spot coin Bitcoin ETF will be perhaps more retail focused.
Is that something you want to do eventually?
A spot Bitcoin?
Yes.
Yes. What's interesting about it is if you look at the pecking order, our filing is next in line.
No, I know you're on the list. So
Yes.
the question. So let me ask you about that, because I think, and the question is actually at $36,000. Do you think that the move that we've seen in Bitcoin over the last, I don't know, what, 2 months now, how much of that is a function of sort of a pent-up demand or an anticipation that the SEC, because folks like BlackRock and Fidelity and you and others have made these applications, have this sense that it's more likely to happen now than it was a year or two ago?
Yeah.
And is that misguided? Is that realistic? What is that?
I think what has happened, the change, is that the SEC actually asked us questions. I think asked us questions, asked BlackRock, probably has asked a lot. Whereas before, our filings were just rejected out of hand.
Okay.
So that is movement. That is significant. And, you know, over the years, I've gotten to know the research people at the SEC, and I'm very impressed. I was impressed by the questions they asked us, too. So
what were the kinds of questions they asked?
A lot of them were very technical. They're all about protecting the consumer. And, you know, of course, the showstopper, at least from Gary Gensler's point of view, is he thinks Bitcoin can be manipulated. And, you know, this is a decentralized, transparent network. You can follow.
So Cathie's bullish on Bitcoin, $100,000 price target. She obviously thinks the spot BTC ETF approval is going to be good for the broader equity markets. And I mean, look, she's been right on that. Crypto's up from 26,000 to 34,000. Bitcoin's up. Ethereum's up as well. So people are excited about that. Cathie's introducing her own Bitcoin ETF, and she's capitalizing on the retail hype the way she does. And we'll see if Bitcoin keep going higher. Cathie's going to make a lot of money off of it, along with Coinbase doing well. Now, granted, she bought Coinbase at IPO at 250. Coinbase is at 100, so I don't know what her average is on it. I don't think she's breaking even yet. But Coinbase doing well, which is one of the top stocks in her portfolio, is going to do well for her as well. Palantir, $19.99, $20. Look at that. We're flirting with 20 right now. $19.99, up 1.47% on the day. Let's talk a little bit about what's going on with Palantir. So yesterday, Reuters put out an article saying that the valuation on Palantir has become too much. It's becoming a little bit overhyped. Some Seeking Alpha articles also put out some numbers that Palantir right now, this forward PE on Palantir is about 80 or 76, something like that. NVIDIA's forward PE as of today is probably around 50 because of his run up. Microsoft's at around 34, and CrowdStrike is at like 68. So Palantir is more expensive than on a forward PE basis and a price to sales basis than NVIDIA, CrowdStrike, and Microsoft. Microsoft's growing pretty much the same as Palantir, a little bit lower. And obviously CrowdStrike and NVIDIA are growing way more than Palantir. So the article was basically saying, look, at $20, you're paying, what's the market cap for Palantir? $43.5 billion. This valuation is a lot. This is what I said on yesterday's Palantir Daily episode, and I'll reiterate my thoughts here. From the bearish perspective, giving a little bit of credibility to the bears, the valuation of Palantir at $20 is implying a CAGR, top line revenue growth, of more than 30% every single year. I mean, at $18.50, it was implying a 30% CAGR. At $20 at this stage of the company, before we head into Q4 of 2023, it's implying a higher than 30% CAGR every single year. Do I think Palantir can CAGR at 30% every single year over the next 5 years till 2028? It's possible. Have they shown us that it's going to happen anytime soon? No. Revenue growth at 17%, right? So we got to be realistic here. At some level, when the AIP starts really scaling, and they've done thousands of videos around how I see that scaling, how I see that going into healthcare, energy, etc., manufacturing, AI spend in the enterprise, all that stuff, blah, blah, blah. Like, yes, the CAGR on that could be phenomenal, government contracts, all that stuff. However, to give the bull case on this, let's assume they don't CAGR at 30%, but we still get this valuation. Why is this valuation still theoretically justified? Because the market's excited. Like, at the end of the day, the market is excited about AI names, and the market was excited about Amazon in 2014 when it seemed expensive. The market was excited about Tesla in 2019 when it seemed expensive. The market gets excited. And so if the market gets excited, they're going to give them a premium, and people are going to have to pay some higher prices because they're not going to give you that opportunity to get back in at $14, $13, which is, most analysts think, the fair valuation of Palantir today, given the implied growth over the next 5 years. You know, that doesn't happen. When you've got 17.5 million shares traded within 15 minutes of the market open, you've got people that are very excited about the company. I mean, think about that. 17 million shares have exchanged hands in the past 14 minutes of me talking. I mean, that's just incredible. That is just absolutely that. There are people care about this company. Let's check Tesla's volume. Actually, let's see where are we bigger than Tesla right now? Okay, Tesla's still big daddy. 24 million shares trade hands in the first 14 minutes. But also, we can make the same argument. Why does Tesla get a premium? Because 24 million people care about it within the first 14 minutes. I'm not saying that's right. I'm not saying that's wrong. I'm saying it is what it is. If people care about this company, if people believe there's a lot of growth, if people believe there's a higher perception, then the market's going to keep it expensive. And sometimes stocks are going to be expensive. That's just the nature of what it is. Now, personally, when people say, oh, Amit, do you think you should buy at 19? My answer is no, not because I necessarily think Palantir is massively overvalued. I say no because it's run up 200% year to date, and it's run up almost over 30% in the past month. That is, for any company, I would say no. Like you just chill out. That's like Tesla at $299. Right? That's Nvidia at 500 back in August. It's like, no, you just chill for a little bit. Like on the green days, euphoria is high, but we have to remember markets do come down. Things go red. Like this is the nature of the equity markets. And we've all learned the hard way that markets do come back down to reality at some level, no matter how crazy they get. And I don't think Palantir is necessarily out of touch with the reality. I just think when you're up that much, there is some level of like, let's chill out for a bit. Let's see if we can get a better entry, and then go from there. And this is very specific to people that are initiating a new position. If you have like an $8 average and you want to average up a little bit to a $10 average, therefore you buy 19, more power to you. This is for people that are looking to get in for the first time, because you getting in for the first time, you're buying some schmuck who's selling you their $7 average at 1984, and you're chasing it, quite frankly. I mean, that's just the hard truth. And so if you want to chase it, that's fine. But I think the one thing I've learned, because I've been a chaser before, and now I drink my alcohol without any chaser. Okay. I'm a man. Except when it comes to Jack Daniel's honey, the whiskey, I can't do it. I need the chaser on that one. But outside of that, you don't want to be a chaser. You want to be a leader, not a follower. You want to be a little bit better on valuation and keep going from there. And case in point, there was a good tweet I saw yesterday. Tesla is trading at the same price that it was in 2020, currently at these valuations. And the revenue has tripled. They went from doing like 31 billion to 100 billion in revenue over the past 3 years, but the valuation is the same. Which means if you bought in at that higher valuation, you're barely breaking even. And so that's why valuation does indeed matter. Valuation does indeed matter in the context of what we're doing. When are you on CNBC, Amit? I don't know, man. They haven't invited me yet. If anyone in the chat has any connections to CNBC, we got a Gunjan on. She was on a month ago. She's one of the analysts on CNBC. Look, they like Palantir. They cover Palantir. Andrew Ross Sorkin, one of the hosts, has been very friendly to Alex Karp. Maybe they need to have your boy on for a segment, talk a little bit of Palantir. We gotta see if we can make that happen, because the world is excited about Palantir, and there's good reason for the world to be excited about Palantir. PayPal's up almost $2. Congrats to PayPal shareholders. I have $10,000 of my hard-earned capital in PayPal. Let me actually take a look at my spreads on PayPal. Oh, wow, folks. Update. I am up $11,317 today. I'm assuming your numbers that you guys sent me in the chat are up even more today, because if I'm up, you guys are up. TFC is in the green. PayPal, PayPal's up. So my PayPal spreads are $85, $125 calls. That means I bought a call for $85. I sold a call for $125. I get the delta of $40, and I paid an average cost of about $5.99 for each of those spreads. Unfortunately, those spreads are at $219 right now, so they're down pretty dramatically. $10,000, down about $6,000 on it. It is what it is. I have 14 months for those spreads to get to at least $85, and then I would be probably in the green by about 10-15% based on the time that it gets there. So that's my price target on PayPal. The price target is uneducated. It is, hey, I need these spreads to be in the green, so better get your ass to $85. Pretty. Now, granted, I bought them when they were at 70. So even if PayPal gets like 72, 73, I'll at least break even on the spreads, if not make some money on them. So we'll see what happens with PayPal. The spreads themselves today are up 13%. So that is up. SoFi is doing well today. SoFi spreads are up. I have 250 of those. $10, $15 calls. They are up about 11% today. Not bad. Those were actually down when SoFi went to like 680 the other day. And I was like, damn, that sucks. But SoFi is up, so not bad in those. And I got those pretty cheap. So we'll see how it keeps going from there. 1,000 shares at 945 on Palantir. Absolutely incredible. Dark Star, that's awesome. Kenneth says, do you have any groupies banging on your door, Amit? No. YouTube finance influencers don't really get the groupies like that. So I'm not a Paul McCartney, but I always wanted to be the next Michael Jackson. And, let me just take a moment to shout out the 1,000 people for being here. Thank you so much for being here. My goal when I was little, laugh all you want. I want to be the next Michael Jackson. When he died in 2009, it inspired me. I wanted to be that stage performer. I ended up realizing I couldn't sing, I couldn't dance. So that initial dream that I desperately wanted to be the next Michael Jackson and perform in front of hundreds of thousands of people, I am getting to live that dream every fucking day in the morning at 8:45 a.m. in front of today 1,000 people, sometimes 600, sometimes 700. When I did this a year and a half ago, sometimes 50 people. And even if there were 5 people, I mean, getting to perform and do my version of that dream, which is now in the equity markets and public speaking versus singing, it means more than you can imagine. So thank you so much all for being here. I just absolutely, it just means the world to me. And it's the most exciting way to start the day. And it's the most grateful way to start the day because you get to perform and do what you want to do. This is what I fucking love doing. So thank you all for being here. That is absolutely, it absolutely means the world. All right, let's get an update on where some of these equities are and let's do a little bit more macro and then keep going from there. You say, give us a moonwalk. Fun fact, I performed at my talent show 3 years in a row. I lip synced to Billie Jean. I did the moonwalk. I won first place at the talent show. I got to find the video one day. I'll show you guys. It was a thing. When I mean I was obsessed with Michael Jackson, I was wearing the white glove and I was doing Billie Jean. I was lip syncing. Like it was a thing. I got to get the video for you guys one day and I'll show you. Meta 334, PayPal 56, Tesla 233, Enphase 86, Palantir 1982. So Palantir not getting above that $20.21 resistance. 2020 or 2024 was major resistance for Palantir. Last time it was at this all-time high in August. $20.23. So we just broke it on the 52-week high by 1 cent, but it came back down to 1986. XLF 34.35. That's the big banking ETF. TFC $30.73, 4.7% up. Apple at 186, Amazon 145, Google 136. I have Google spreads as well that are up today, doing pretty nicely for 2026 as well. Those spreads are up 20% today right now on Google. I have about a $10,000 position in Google as well. Datadog at 107, Snowflake 164, Lucid is up as well. Ethereum 2050 still doing pretty well. Coinbase up 2% and Robinhood at 862 up 3.73% on the day. PayPal, not bad, 3.29%. It's hard to get PayPal moving. PayPal is moving today. SoFi up 5%. There we go. Now we got some momentum in SoFi. Up 5%. Not bad at all. Erwin says, let's get your best hee. For those that are friends of the channel, if you remember when Palantir was gap profitable for the first quarter in May of 2023, I did a little bit of singing for you guys, and it kind of went like gap profitability. That's okay. I'm done. I'm sorry that was so cringe, but that's what happened when it just came out of me that day when we had Palantir get to gap profitable. Kelly, thank you for being here in the chat. I'm sure your U.S. equity portfolio is up. Kelly had an interesting tweet yesterday that said her Canada portfolio is down like 60% or something, but her U.S. portfolio is up pretty dramatically. And that's another reason why it's fun to invest in U.S. companies, a SoFi, a Palantir, a Verizon, a Truist, an Apple, Amazon, Google, Microsoft, NVIDIA, Tesla, PayPal, Meta. These companies are not being built with maple syrup, folks. These companies are being built in the United States where we respect liberty, autonomy, freedom of speech. This is why investing in the U.S. equity markets are some of the most exciting things to do in the world, because you got these companies that the market will reward if they're able to grow, and they're able to grow because we're in the United States. And so that's why some of these stocks are up. $19.93 on Palantir as well. Oil is down $71. Home Depot had earnings today as well. Let's look at that really quickly. Earnings per share, $3.81 on Home Depot versus $3.76 that was expected. I think I have become a man officially because I started going to Home Depot every Sunday for the past couple of weeks to do stuff at Home Depot, like to buy like wood and shit. So $3.81 versus $3.76. No, it wasn't wood. It was like some Velcro strips. Don't judge me, but you know what I mean? Like I still had to go to Home Depot to get it. I didn't want to go to Walgreens, even though I probably could have gone to Walgreens to get it. Revenue at $37.7 billion versus $37.6 billion. So they went, they're up a little bit on revenue. They beat on EPS. Home Depot stock. Let's look at these guys real quick. Home Depot, look at that, up 6.22% on the day. It's not easy to move a stock like Home Depot up 6% on the day because they have a dividend of 2.7%, net income of $3.81 billion, down from last year, but still not bad. Guidance was good, I think, for the market, which is why Home Depot is up 6% on the day. That is not easy for a stock like Home Depot. What does that mean for the broader market? It means the consumer, people like me, keep going to Home Depot and keep buying shit. It also means, here's another bit of analysis here, home construction, we talked about that at the beginning of the market open, that's starting to go up. Where do you go to get all the material to build a home? A lot of times you go to Home Depot. I mean, even I know there's obviously more sophisticated vendors that supply all the stuff that it takes to build homes. But, you know, people go to Home Depot if they're fixing up their house. So that's probably another reason why Home Depot is seeing a little bit of value appreciation as well. I want that as my ringtone. Goodness gracious. Imagine you get a text every time you remember that Palantir's got profitable. House to vote on GOP plan to avoid government shutdown this morning. Let's spend a little time on this. Yes, the United States government has a Congress where we have a House of Representatives and we have a Senate that makes up our Congress. Those are two components of it. We just got a new Speaker of the House that was elected a couple of weeks ago, and he believes that he has bipartisan support to make sure that the United States government does not shut down. Now, if the United States government were to shut down, that would be really bad for equity markets because that would be instability for the markets. The markets don't like instability. They want to make sure things are going okay. We avoided a shutdown in October when Kevin McCarthy was ousted as the Speaker of the House. We got an extension until around this week of November. And so it seems like I think the bill is going to be voted on in the next couple of either today or next couple of days. We will see what ends up happening. But so far, it seems like that's going to be fine, which means if we avoid a government shutdown, that's good for the markets. CPI, inflation coming down, that's good for the markets. Remember, folks, we're at 3.2 on headline CPI for those that are just joining. 3.2 is very close to 2.9. And that two handle, remember the Fed has a goal of a two handle on inflation. We get that two handle coming down. That's going to be really important for markets to be a lot more excited for broader inflation. Let's get a little bit of a bullish take on inflation, down because of inflation by macroeconomic expert Barry Knapp and see what he has to say about the broader decline in interest rates as well. Let's set this up right here. All right, here we go.
The data that we're going to see today and the potential market reaction. Barry Knapp
did 2 weeks ago that sparked the rally, along with the Fed meeting and then a weak payroll report, was really a Band-Aid. By increasing Treasury bill issuance, it actually looks like liquidity is starting to tighten. You watch that Fed RRP program dropping precipitously. They may find themselves having to either tweak or stop QT before too long. So liquidity will get tight. They increased issuance in the belly of the curve. So 2-year note to 7-year note coupons or notes. But the problem there is they need the banking system to participate and finance a lot of that part of the issuance. And the banking system is in no position to do that in as much as the curve is still inverted. The Fed is still threatening to hike further until we can actually get visibility to Fed rate cuts. I don't think the banking system's in a position to really help the government finance themselves. So
now this is really important what he's saying right here. We're going to transition to Tesla in a second. What he's saying right here is that the banking system in the United States has to help finance our debt and the U.S. government writ large. Until interest rates come down, the banking sector wants no responsibility in trying to help fix the economy because they are holding billions of dollars. I think on JP Morgan, we got $40 to $50 billion of losses on their loan portfolios because they issued them when interest rates were at 2%. Now interest rates at 5.5 or 5.25. That delta is where they're negative. So interest rates coming down ultimately helps banks take those losses off their portfolio. The only way interest rates come down is inflation comes down, and it helps them refinance the entire U.S. economy. They can issue more mortgages at lower rates. They can actually help finance more businesses. If you have a small business, you want to get a loan, you're more likely to get that loan when the bank doesn't have $50 billion of losses on their portfolio. So that's an incredibly important point when it comes to banks being able to make sure that they can actually do better in regards to helping refinance the United States economy, because you need interest rates to be lower in order for them to have the incentive to do that. Let me pull up an article here by Tesla. I wanted to bring this up, a couple of different headlines around what's going on with Tesla as well. This is also really important for why Tesla's at 233. So Tesla India gains new legs as government considers reducing import tariffs. We talked about this a little bit earlier before. Their view has always been that they need some tariff concessions, at least in the interim period. It would have been some kind of sunset clause, stated one government official in India. Now, Indian officials said the government is thinking of reducing its tariff for imported to 15% for EVs of all prices. This is a big deal. India's government has not yet officially agreed on the tariff reduction. However, 15% is a significant reduction from original customs of 70% on cars less than 40,000 and 100% on cars worth 40,000 on more. So, I mean, Tesla, they were like, there's no way in hell we can sell it to the Indian markets if we're going to be taxed 40% on these EVs. So getting it down to 15% is definitely very important. Another big headline on Tesla that we talked about a little bit before, ExxonMobil is deciding to produce lithium in the United States starting in 2027. Exxon is going to produce lithium in Southwest Arkansas with initial production starting as soon as 2027, according to a press release shared on Monday. The company arm will be branded Mobile Lithium as it aims to be a lead supplier of lithium for EV batteries by 2030. Why does this matter? Because Exxon sees the writing on the wall as well. They know that it's not going to be easy for us to keep selling oil in 2030 because we just don't have that much oil in the world. And, the demand for that oil, even though it's going up overall, it's going to go down long term. And we got to be ready and prepared to enter into the next sector of what our company will look like. Lithium, EV, what it takes to make batteries, what it takes to make electric vehicles. That is another sector that these companies are diving into. And that shows more broader demand writ large for EV companies as well. Let's take one last look at the market, folks, and then we'll be done for today. Thank you, everybody, for joining me. CPI came in at 3.2, which is why we're seeing the rally. Palantir at 1993, not really getting to that $20 level. It's been resistance for Palantir. It's tough to crack the 20s on Palantir. So let's see what ends up happening. We never know. In the next couple hours, it might just end up ripping or it might go downwards a little bit. So we'll see. 1994 on Palantir, JP Morgan 147, Bank of America 28, Truist up 5%, $30.87. Verizon's up 35, S&P 500 447, up almost 2%, 1.77% on the day. Microsoft at 370, Apple 187, Amazon 146, Google at 135, PayPal 56, up 3.68% on the day, and Tesla at 233 on the day. Meta at $336 as well, just under its 52-week high, $865 billion market cap. Enphase up 10.9, now 11% on the day. So Enphase at 74, now at 87. Not bad. As and when interest rates come down, I know we all wrote off Enphase, but if interest rates really come down, if it ends up becoming that bull market of 2023, Enphase or 2024, Enphase would be the recovery of a lifetime if it can get back to that $200 level just based on interest rates coming down. So we'll see what happens. Palantir at 1994 as we end out the market open. All right. That is it for me. Let's do the word of the day. For those that are new to the market open, we do a word of the day every single day. Let's see what we got on today's word of the day. I usually don't know the word of the day before we get into it. So here we go. 884 people. This is the word you got to use today. Monadnock.
Monadnock.
Yo, I say them so wrong every time. Monadnock.
Monadnock.
Okay, I said monadnock. Monadnock. I never read the pronunciation. A residual hill or mountain standing well above the surface of a surrounding area. A mountain. It's basically a mountain. They wanted to have a fancy way to say it. So next time you're talking about mountains, you say
Monadnock.
All of us are trying to climb up the proverbial monadnock of financial independence. And today, ladies and gentlemen, we have not hit the peak of that monadnock, but that CPI going down from 3.7 to 3.2. Damn it. We are getting higher and higher upon that monadnock, not only on the S&P 500, but also on our own personal journeys to beat the market and become more financially free in our own lives. And even if you don't beat the market, as long as the market goes up and you're somewhat with the market as it's going up along that monadnock and you get to the top of that monadnock and you can see the horizon, it means you have a little bit more money than before. And that's because you made the decisions to spend time to do research, watch things like this, allocate your capital to assets that majority of the world isn't paying attention to because the majority of the world does not care about investing. You are the people that do care about investing. I am one of those people that cares about investing. All of us are trying to better our lives. And that's why on a day like this, you sit back and you bask in the glory of realizing I made decisions that other people didn't make. I took the time to research. And because I took the time to research and allocate that capital, I deserve some of those returns, even if they're just on paper. All right. That's it. Thank you, everybody. Have a great day. We'll be back with another Palantir Daily episode in a couple hours. Finance Junkies tonight, 9 p.m. Eastern Standard Time. And I'll see you guys tomorrow on the Market Open, 8:45 a.m. Bye, everybody. Have a good one.